afternoon, this is Dan Howe, PTI Securities and Futures, coming to you on your Monday, November 28th daily wrap-up. Overnight, we had a relatively normal range, about 20 points overnight. Unfortunately, it was way up if you happen to be short. Asia was way up, and Europe was also way up. Our fundamental news really there wasn't much. It was some housing news that came in slightly better than expected. No real earnings news. So the story of the day really actually happened yesterday afternoon, and it was an Italian newspaper that actually said that the IMF was preparing a large-scale effort to buy Italian bonds. This is kind of interesting because realistically the ECB has said, their bank president as well as the German Chancellor said the ECB can't do this by treaty, so they've been precluded from doing it large scale. However, the ECB can lend to the IMF, the Fed can lend to the IMF, and the IMF has no restrictions on buying bonds. So realistically this is a plan that looks like it could work. However, it was denied by the IMF, and as we know, nothing's official till it's been officially denied, and it was. So we don't know going forward. However, it had a very big impact on our market. It basically opened up, about 30 points in the S&P, stayed there for almost the whole morning, tried to sell it off on the close like we did Friday, but it came right back. So realistically, this has been very good for our stock market today. However, you would expect that if we're going to be doing large-scale asset purchases, especially of Italian bonds, this would have had a very positive impact on the Italian bonds themselves, therefore lowering the yield. But their yield yesterday only went from 7.25% down to 7.23%. Barely moved the needle. Same thing with our bonds. It's been a flight to safety recently. People running to the dollar and actually buying our bonds. Well, our bonds and our 10-year note really didn't move much today, so there really wasn't much in the way of selling, an increase in yield yesterday. So that's kind of a question mark. However, the dollar did go down, so realistically that had an impact on all dollar-denominated commodities. So you had the grains moving up, oil moving up, and gold moving up. Gold is probably the biggest mover, and the problem with that, and probably the opportunity, I guess, with this, is that if they do large-scale asset purchases, this could be creating money similar to our QE2 over in Europe, and that would be inflationary, and would probably see that the most in oil and gold. So gold was probably the strongest, and probably for good reasons. This turns out to be true. It's been Dan Howe, PTI Securities and Futures.